Hello, and thank you for joining me in what is our second webinar on VAT in the GCC. And as always, we try and put a bit of an ERP twist on it. I'm sure at this stage you've probably had a lot of advice or speaking to a lot of people, and they're giving you the concepts around the VAT law, but how does that actually impact your system? So hopefully this session will give you a little bit more of an insight of what you've got to expect. I've literally just come back this morning from Dubai, where we just spent some time with one of the big companies over in the region to help them with their VAT. So, who are we? We're actually I would say we're the biggest Oracle indirect tax specialist, tax automation specialist globally that no one's really heard of. We are obviously becoming more well known, but when it actually comes to Oracle indirect tax, there is nobody who has a bigger team with more experience under one roof. And we've now got offices in the US, UK, Bulgaria, and soon to open up in Dubai as well, actually. So what I'm going to talk about today is a quick country update. And then I'm going to talk about how your project timeline may be impacted with what's going on, and then actually deep dive down into more about the real issues. So first of all, Saudi Arabia and the United Arab Emirates. What we've got here is the two main economies of the region, or two of the main economies of the region, and they're the ones that are spearheading the rollout of VAT in the GCC regions. So, excuse me, this is almost certain that they're going to go live when on the 1st of January 2018. Everything is indicating that is the case. And hopefully by the end of this month, which is July or early August, we should be getting at least another round of legislation, hopefully the final legislation. However, one of the big twists so far, the UAE had previously indicated that they may want to split VAT reporting by the Emirate. And that would mean each of the Emirates, you'd basically produce a VAT report and be able to show the VAT by each of those Emirates. When I spoke to Deloitte about a month or so ago, they seem to think that may not be the case anymore. But a recent publication on their website actually indicates that is back on the table. And the idea is that the VAT returns will be designed to basically report the split in revenues by each Emirate. So this is starting to show something I've been talking about quite a lot, is that it's not just about the tax rate. So the concept of just being able to say it's 5% or 0% is not going to work. It looks like we're going to need to bring in more information, more values in terms of whether it's which Emirate location it is, potentially with its goods and services, etc. So what does that mean to you now? First of all, I think you can start to look at your customers and your suppliers. So any addresses that you may have, make sure you've got a validated address field that can be used to capture the Emirate. Now, something that we've recently found with the Indian GST rollout is introducing the state, and some companies have actually got their own address format, and they haven't actually linked the state in the tables to the correct table values. So what that means is that the knock-on effect is that you can't actually put tax validation against it. This is primarily on the Oracle configuration. I'm sure there's probably something similar, but the point I'm trying to make is that when you are actually when you are actually putting together the new address field, make sure you do it in the right way that can actually be used by a tax engine as well. Any third-party interfacing that you're going to do, we'll talk more about that later on, but any third-party interfacing that you'll do will also need to capture that information. So if your system that you currently have is a custom-built system, doesn't even have VAT, not only are you going to have to capture the VAT, but you're also going to have to capture the information that is needed for the reporting. So some of you may say, well, hang on a minute, this is only going to be about revenue reporting. But if you set your tax reporting up so that you can report by your tax date rather than your GL date, then you potentially would have transactions that don't actually fall within one GL period or one quarter. So the revenue reporting could mean that if you're reporting by the VAT transactions, that may not actually reconcile back to your GL. So you're either going to have to do your reporting split in the GL, and then you're going to have to get VAT information there, or you're going to have to basically capture that information for your VAT return. So you may need to look at that, may even have to look at some compliance tool, third-party compliance tool. So we've actually written an article, and if you look at the QR code there, if you want to take your phone out, scan that, for example, it will take you directly to our website, and we do have more details in that, what the announcement was by the Ministry of Finance, and then what our reply is and some of the areas that you're going to have problems. So anywhere you see that QR code, normally they're different ones, but it should give you a direct link back to our website where there's more information on the subject we're speaking about. Okay, what about Kuwait? So the interesting thing is that Kuwait is likely to be delayed, and we're pretty certain of that. And their attitude, or the way it's been interpreted in the media, is that they don't seem to put that much of an emphasis on the importance of VAT. They have signed up as part of the GCC to introduce VAT into the area, but they're not too fussed about it by the looks of it. And actually speaking to a client a couple of days ago in Dubai who have a manufacturing site in Kuwait, they said that they were actually talking more about corporation tax, the introduction of corporation tax, and potentially not actually looking at the VAT at all. And so they may delay that even further. I don't necessarily think that's true, because the guidance of the GCC VAT solution is that, you know, it's meant to be introduced within the year of 2018. So bear that in mind. But what it may have been, or the confusion may have been, is that the Kuwaiti authorities are actually trying to, I think they had a deficit for the first time in several years, and I think maybe what they're trying to do is reduce the amount of money they're spending. So actually put in some austerity measures that would reduce the amount of expenditure, and that may be where someone may have had a confusion around corporation tax. So whether that is the case, whether they're going to look more corporation or not, we don't know, but more to come on that later on. Okay, Qatar. Unless you've had your head buried in the sand for the last several weeks, it's been all over the news. Qatar has been ostracized by the rest of the GCC for reasons that they have decided to stop basically trading with Qatar, etc. So it's caused a few problems in the area. Qatar are still part of the GCC, and they had committed to the rollout. So it may delay, in fact, it's almost certain to delay the go live of VAT in Qatar. Maybe they pull out completely. You'd like to think they wouldn't, but you know, you have to wait and see in terms of how that's going to unfold. And of course, having VAT as an income could actually be something that's needed in the region. Oman and Bahrain, there's mixed opinions as to when Oman will join. About a month ago, the opinion was that they're going to try and move it forward for the 1st of January. Whether or not that's going to happen, I don't know for sure, but they may delay, and Bahrain, the indication is that they're probably going to delay. So watch this space again within those two countries. Excuse me. What I would like to say is, when we're looking at the actual impact then, or the implementation impact, most people will be thinking like this. They'll be thinking, you know, UAE, Saudi Arabia, they may have been considered the other countries as well. And they'll be thinking at this time, their rollout date is to January 2018. And in reality, what we've got is the requirement that you go live in 2018. We then have to have support around that time. You have to support your first VAT return, which is around April time. And then if you do operate in Kuwait, Oman, Qatar, Bahrain as well, how do you count for that? So that actually poses some new issues. And if we actually have a look, sort of what could potentially happen, is that if we were to say, you know, Oman and then Qatar and Bahrain went live differently, how do we actually do that in terms of a solution? We don't want to have to start a project 3 times. So what we're suggesting, and what we're certainly doing, is we're building a solution now that is met for all GCC states. In fact, we can actually, if you're on an Oracle system, we can actually get you up and running, ready for testing, all 6 countries, based on our best practice and from the experience of working with 120 other VAT and GST countries. we've built the same logic that we've seen, across, say, Australia, Malaysia, UK, Germany, etc., like this. So we're pretty confident that what we have produced will meet 95+% of the legislation once it's finalised. So what we're saying is we put that in, put it in now. You can then test the system that it calculates tax. Doesn't matter if it's going to be 5 or 6%, whatever the percentage is, we need to be able to test that tax can be determined. The biggest issue is going to be around your third-party systems, which we'll talk about a bit more later, but you need to start working on those now. One of our clients has a huge number of those, and to be able to meet the requirements for all of those is going to take a lot of time. Also consider, if you've got an interface that works across different regions, do you really want to have to work out one that calculates VAT and the other one turns tax off? In our solution, we would advise to have a consistent, standardized approach. Standardization is key to our solutions, and we would potentially say that if you're invoicing you're in Kuwait, rather than having a separate invoicing solution or separate invoice, etc., is just to calculate, Kuwait tax not applicable, or something like this, or something where even if your invoice print is dynamic, it doesn't pick it up and print anything, but your system will allow to calculate the tax. What that means is that you can build one interface, one solution, and the tax will be working based on the rules it currently has. And then, of course, when those countries introduce the tax, you only have to make sure you adjust the rules and you apply additional tax rates if they're needed. So all of the interfacing, all the reporting, everything else has been done up front, and it should make the transition to using those tax regimes a lot easier. So the other thing is, if you're doing it that way, make sure, in our opinion, do your CLP1 or CLP2 at the same time. The CLP1, which is your usual, your first test phase, the idea is to prove the concept works. CLP2 is to say, okay, this is the concept, but it's using our configuration, what we believe is needed. So we say do those together, get all that work done, do your workshops up front, because those workshops are very complex to understand what is required. Also to educate your team. Most of the people we speak to have little or no real idea of the impact of VAT. Some of them just think it's 5%. They don't realize that, you've got imports, goods, services, reverse charges, zero rated, out of scope, exempt, export, standard rated, recoverable, non-recoverable, partial recovery. There's a whole load of things that actually come in, and therefore it's much more complex than a lot of people realize. You also need to make sure those people are aware of the consequences of not getting the tax correct. And what I mean by that is that if someone in purchasing doesn't choose the right ship to location, and you have tax calculated based on Saudi Arabia when it should actually be based on the United Arab Emirates, it's going to cause you problems. Okay, so that's something we really think you need to be aware of, is the actual project timeline, and to make sure that you have users available. So, for example, we will look to have resources to support our clients around the first tax return period. That could be a good time to utilize those resources at the same time to start getting ready for those other countries. Okay, so what we've also found, again, we specialize in Oracle, but what we've found is that actually the setting up of tax in Oracle is easy. That's our bread and butter. We know it inside out. There's nothing we cannot do in terms of full tax automation within Oracle. But we've just come back working with a very big company. They have over 200 applications that need to have some sort of VAT applied to them or passed through them. Some may be purchased, so they're off the shelf, or they're bought from a client. They may have been enhanced, modified, and many are custom built. And they had no consideration for VAT when they were built. So that is a big, big thing to focus on. If you get the right people in to help with the actual tax solutioning and the standardization, but make sure you start now with those interfaces. If you haven't started already, you are actually too late. We're talking to several clients at the moment. We're signing clients up to work with them. They're going to be the lucky ones, because we can guarantee they're going to get a great solution. If you leave it until October time, for example, not only will you be giving yourself a very small timescale to get things right, but the good people, the good resources won't be available. You'll be ended up just, wishing, or using resources just to get something happening. So you can spend a lot of money and not necessarily have the right end solution. Okay, so what we've also found is a lot of these systems, they're billing systems or ordering systems, they do a lot of interfacing into the system. So the actual information that is basically coming into the system isn't actually being captured into your isn't actually being I'm just going to launch a vote here, guys, so if you want to click on that, that'd be great, and I can send the results later. But a lot of the information coming in isn't actually coming in where someone will actually, you know, handle that tax, whether it's in Oracle or whether it's in SAP, for example. So you have to have that consideration. If you're capturing information in Oracle or SAP or whatever other system you have, are you capturing the right information that can potentially be reported for VAT? And if you can't, then do you have a separate reporting tool to be able to do this? One of the other things, age of some systems, you know, you may have a system that's 20 years old and it's creaking, it's a sunset system, you know, you're looking to potentially get rid of it, replace it, and you know, that could be you know, a huge project and potentially a waste of money because, you know, 1 year later you've got rid of it. So you need to look at that, and potentially you have several of those systems, and so maybe some sort of staging tool where you can pull information in that works out the tax, and then you pass information back and update that original interface could actually be a better way forward. So what we have also sort of seen is the fact that most companies within the Gulf area, they tend to be very how do I put this? There's a lot of them, very diverse, lots of different industries. So where you may have a business that is, say, in banking, and you know, everything's around the financials, and you can drive it accordingly. A lot of these companies have banking, food, restaurants, hotels, construction, trading, oil and gas, education, all of them having quite big impacts around VAT and how you process it. So how do you build a solution that can meet all of those requirements, or do you have to separate it out? So again, that's something to think about. Our approach, of course, is always to standardize. Our solution actually covers all industries. But if you're building something yourself, then you can't look at one particular industry, build a tax logic, and then expect to necessarily share that with another industry, because the tax logic could be different. Something to be very careful of. So these are 8 areas that I'm going to talk about. These are the big areas, in my opinion, that are going to give you the problems. So the first thing is, does your system provide any tax capabilities? If it's a vendor bought system, it should. If it doesn't, push back now. Say, look, where's your solution? We want to see it. If we look at what's happened, for example, with the rollout in India for India GST, due to the crazily short amount of time given to not only companies to get ready for VAT, but also for system providers to actually get the solution ready, you know, things have been very, very pushed. And so therefore, if you leave it to the last minute expecting that the solution will work, you may not have the you know, the happy outcome. It could be a surprise that actually things don't work. So start speaking to those vendors early on. You may also be part of a global solution where tax is already being calculated, and it may just be an easy way of moving things across. How does your system interface into your ERP? Okay, if you're putting information into the AR and the AP modules, generally if you have a good ERP system like Oracle, you can capture all of the tax information as you bring it in, and then that is all forced through to the GL, and you have all the correct tax reports. But if you're bringing stuff into the GL, there is no transactional information. So that means you can't necessarily report in the same way you would do from AP and AR. And if you're posting directly to tax accounts, that could also have an effect on your reconciliation with your AP and AR modules that are posted to those tax accounts correctly. So we'd definitely recommend, if you are bringing transactions in directly via the GL, to have a separate VAT account for that, separate control account, so you can easily reconcile your transactions that are coming from your system. You also need to make sure that you're capturing the right information. So if we have to report by the different Emirates, then we need to make sure that we've got the information that allows us to do so. Or you need to be able to capture that information elsewhere, such as a consolidation, sorry, a compliance tool that may be provided by some of the bigger tax engine providers. So you need to be aware of that. Is there a goods and service split? Do you need to bring that in? Are you actually bringing in tax lines? Or are you actually bringing in raw data and then getting your system to calculate the tax? So we have a client that has both billing systems that have to create an invoice, and therefore we have to bring all the tax in as is. So it has to be mapped, and there's no checking going on other than what's been done in the source system. And they also have the requirement that they have a billing system, and the invoices are actually created from Oracle. So in that situation, we bring the raw data in, and we can then create the invoices that are sent to the client, and all the tax is correctly captured. But we need to make sure that we have the right data to allow us to calculate that tax. A lot of companies consolidate. They have a million lines from a travel billing system, for example. They sold all these hotel rooms. They do not want to bring in line by line, so they currently consolidate. But if that hotel consists of accommodation, food, maybe there's some events, vouchers, whatever they may be, you may have different tax being applied, 5% and 0%, for example. So at the very least, if you are still going to consolidate, you have to consolidate and split by that tax type. So don't just bring in all of those lines and expect it. Now, there are with Oracle, for example, we can actually bring that data in. We can work out what the difference is. If it is just a 5% tax rate and a 0% tax rate, we can work out what the total costs are. We can work out what the tax is. We can then work out how much of that was 5%. But if rates change in the future and you start having reduced rate taxes, that's going to stop. It's going to become a lot more difficult to do that. So again, you need to look at those considerations. What about the journey of that data? Do you have one billing system feeding into Oracle, or does that billing system feed into an invoicing system that then feeds into a revenue generation system that then feeds into Oracle? If that is the case, you may have a revenue generation system that has no requirement to actually determine tax, but it does have a requirement to bring that tax information through if you're doing your VAT reporting from that centralized system. So again, either you bring that data through, it can be reported, or you have to capture it in some way to an external tool which can do your compliance for you. Something as simple as goods and services, the split. It's a big emphasis in Europe, but most VAT or GST countries need the split between goods and services. At its very most basic level, if you import goods from overseas, you're going to pay customs tax. So generally the tax rate would be at 0% in your system. But if you import services from overseas, it doesn't go through customs. So you're going to have to reverse charge that tax. And if you want that to happen automatically, which we can definitely set up and fully automate for you, we need to make sure that that information is available. If you get that wrong, and if you are a company, for example, that does not recover all of its tax, and you were to set something as goods, which would come into the system as being 0% tax, because you're expecting a separate tax-only invoice, and that doesn't happen, you're now not reporting the correct amount of tax that you should be. Okay. So when with that in mind, you should be looking at bringing in or certainly splitting the goods and services. And this goes back to my point about creating a purchase order, for example. Make sure you have the right split then, because the person entering the invoice won't know what they're buying. The person creating the purchase order should do. In Oracle, there is a bug around your purchasing line types. You can have a quantity, so a purchase of goods by quantity, which is defaults in goods as the tax type, product type. But you can also set it up to say, I'm buying goods by amount. Unfortunately, that sets the tax type or the tax product type as being a service. So if you have that set up at the moment, we actually have a fix for that. But again, it's something to be wary of, because people setting up your purchasing won't necessarily know to look at that as being an issue. The other thing, of course, is that in the future, if the Gulf states decide to create some sort of reporting tool, where or some sort of reporting requirement like Europe, where they have the European Sales Listing Report, and they want to know between the GCCs what are the sales of services, what are the goods, so they can start reconciling. You may need that split again later on for reporting purposes. So definitely something to consider and something to look out for in the legislation when it is announced to see if there is a legal requirement to capture that anyway. Item masters. If you're going to have a custom solution or a third-party solution, it's unlikely they're going to have anywhere near the level of complexity in terms of determining the tax as Oracle does. Oracle is very unique in that way. So if you're building a system, you're going to want to ideally default a tax code. So the standard would be 5%, and then if that item that you're selling is zero exempt, you would default that tax code in. Now, if you're going to do that, you're going to have to default it in from somewhere, which means ideally you have some item master. And if you have an item master, you want to find out if you have a separate item masters for all of your interfaces, or whether you have a global item master where you can set all the classifications once. If you've got 20 interfaces and you have to update them 20 times, that could become a risk to you. You may also have to capture additional information. Do you have to capture whether it's goods or services, or do you capture the fact that it's a goods and services in the split on the item? But then you have the problem that if you're selling that item and it's usually zero rated, and it goes overseas, you're going to calculate a 0% tax, not the actual standard rated. And likewise, if you're buying it, instead of buying it locally and you're buying it from overseas, then you're going to have to say, okay, it's not standard rated, it's actually import of goods. So you may need to look at how your item master captures that information for you. Okay, what about your customers and suppliers master? If you've got suppliers and that supplier is not registered, or that supplier is an exempt status, or even customers that may be exempt, what happens if you're selling standard rated items that are classified in your item master as being standard tax, and then you sell to the government or to the military, or you're selling it to an oil rig and it's offshore? Now all of a sudden the customer master in terms of defaulting a tax code would potentially be important. What about the VAT registration number? If you're bringing that information into your system for the compliance part, and you don't have a VAT registration number, is that going to be a problem or not? Do we need to report the VAT registration number at this point? We don't know. We haven't had the final legislation. But if you look at a country like India that require the GST numbers to be added on every transaction because they match it. So every purchase you make is matched to your supplier's invoices that they submit. If you have someone who says, I would like a VAT invoice out of the system, you're then going to have to give them one. And that means you cannot consolidate their transaction because they've asked for a VAT invoice. And if you do have the matching, then you have to bring that through to the system and to allow it to be reported on its own. So there's a huge number of considerations that you need to make. The other thing around the supplier and customer master is when you bring that information in and you store it from different systems, you may actually have the same customer set up multiple times. And you also may have different sites. So you may have a customer has a site that is offshore and therefore out of scope tax, and another site that is local and therefore is taxable. So again, maintaining the data could become another problem for you, something you haven't had to worry about to date. Whether it's goods and services, the emirate location, do you have to supply the quantity, the tax amount? A lot of invoices need to show the number of items being sold as well. So if you're just saying this is $1,000 or 1,000 riyals or 1,000 whatever the currency is, sorry, just a bit of a mind block there. Do you actually have to bring that in? Do you have a situation where if you're invoicing in US dollars or British pounds or euros, you have to capture the exchange rate, because particularly if you're submitting that invoice to a domestic customer, because that customer, when they enter it, will have to use exactly the same exchange rate. Freight Incoterms. Do you have a customer that comes and picks products up from your location? If they do, you charge them standard tax. But if they're taking those products overseas, do you then say, well, actually, we trust the customer, they have the paperwork, we'll charge it as export, we'll charge it as zero rated. So there's a whole load of information that you need to consider and think about that you'll have to capture to bring through. Okay, so lessons learned. I think one of the things, it was interesting from the poll, I think people are split. We've heard some good news and bad news, but be careful of the advice that you're getting. A tax consultant knows tax. They don't necessarily know the best way of getting that tax captured and reported out of your system. We continuously take on projects where we have to improve a solution because the way the logic has been misinterpreted in terms of how you get that data has meant the solution has not delivered on what it should do. We've also heard that a lot of impact assessments have been done in the region, and the outcome may not be as expected, particularly as we don't have the legislation announced yet. So you can't have this is the matrix, this is how all of our scenarios, and this is the tax treatment. You know, a lot of people are basically spending a lot of money to be told that they're going to have a cash flow impact. But look at the advice. Another client of ours, and initially were looking to drive all of their tax by nominal accounts based on the advice they're getting. That's a bad way, right? If you've got a standard rated transaction that is a nominal account that says, yeah, this is taxable, well, what happens if it's non-recoverable? What happens if you have a code that could be exempt or zero rated or taxable, or it could be partially recoverable? Or what happens if it's, the supplier is not registered, or your customer is overseas, or they're exempt? Do not drive your tax determination by your nominal accounts. You'll end up tripling the size of your chart of accounts, and it'll be a maintenance nightmare. So whatever, if you're looking at do this, you've got time. Would back away. There may be some situations if you have a very basic, simple solution. It's very much a specific industry. You're not selling overseas. You may be able to do it. The general advice from us, certainly from the times we've seen other people do it, and we've had to go in and fix it, don't do it. What we're also seeing is, hey, look, we just sell all this. Most of the stuff we sell is standard, or it's zero rated, or it's exempt. We don't have to worry about the tax so much. Don't focus on the majority, focus on the exceptions, okay? Because it's the exceptions which is where you'll have the problems. If you build a solution that calculates tax 99% of the time, and you've got a $1 billion business, then that 1% is a huge amount of money for you. So don't, be careful of that. Don't just say, oh, well, this is roughly what we do. You need to be able to look at the solution and be able to determine the tax correctly. Okay. By the way, if I've got about another 5 minutes or so to go on the presentation. So if you want to start submitting questions, I've got one question there which I'll answer at the end. But if you start putting those questions down, I'll go through all of those and answer them on this webinar for you. So please start putting your questions in. Okay, so yeah, that's the thing on the exceptions and stuff. You want to make sure you capture the right tax. Okay, what about third-party tax engines? This is an interesting one, and it really does come down to your scenario. Okay, so if you're using Oracle, for example, the in-house tax engine will meet all of your requirements. So any of the clients we're working with, they've got primarily Oracle. Even when they're interfacing data in, we have the best practice for being able to capture data. So, for example, a lot of customers would be looking just to interface data directly into AP and force a tax line in. We can actually put some logic in place. So even if you have an invoice capture system where a user has to choose the tax rate, if they're choosing a tax code and we just said standard or zero, when it comes into the system, we can say, all right, is the GL code being used linked to business entertainment? If so, let's make it 0% recoverable. Is that zero rate? Are we buying from overseas? Well, let's reverse charge it. Purchase of services. What happens if it's linked to insurance? Let's make it exempt. So you can actually minimize what the users have to capture in their third-party systems, and you can do a lot of the logic in Oracle. What we actually say is that if you have the ability to pull the information in, you always recalculate the tax, because as some of our clients say, our tax data is correct. Well, if it is, you won't have any problems. But every single time a client has said that to us, we flagged issues where their system wasn't perfect. So that is something we'd always say is if you're using Oracle, you have the ability to always recalculate the tax. If you don't think that's possible, contact us. We'll explain how. And therefore, you have like a level of validation. Okay. So when it actually comes to your bigger real estate, all the other applications, and as we've identified, many of which are very much custom built, no concept of tax, then have a look at that situation. If you have a parking system, for example, you don't need to have a complex tax. You can either default a standard rate tax code, so every single transaction has that 5%, or just change the amounts. Change the amounts to be 5% on top, so it's just still the same system. You've just increased the amount by 5%, and then when you import it into your solution, you can recalculate the tax and say the VAT was inclusive. So there are ways where you don't have to force a tax. If everything you're selling is zero rated, well, don't bother calculating the tax on the system if you don't have to put it on an invoice. When it comes into your system, just put a zero rate line on each of your transactions. So you're not changing the amounts in any way. That's safe. But if you have to calculate a tax amount, or you have to print an invoice in a third-party system, maybe look at changing the way you currently do that. Maybe bring the data into Oracle in its raw format, and the Oracle or SAP or whatever other tool you have calculate the tax for you. But if you have complex requirements from your third-party systems, then you should be considering a third-party tax engine. So they also have other benefits around compliance. If you have systems that don't have the tax data that you can't pass through, then maybe that information can be loaded into a compliance product separately. So look at that as well. Even if you are considering and you pretty much think it's a slam dunk deal in terms of putting in, say, for example, Oracle, or manually putting in tax, speak to these guys anyway, because they may have products or tools that you just simply didn't know about. The phrase I always use, of course, some of you may have heard it: if you go into a restaurant and there is no menu, how do you know what to order? So make sure you have that list of information, speak to the right people, and then when you make your decisions, they should be the right decisions. Okay. So I'm just going to do another quick poll here, and this one is based on the help you may be needing. What we're finding is we're engaging with clients now. Some don't have any idea of what they're doing, and but others are quite happy. They may have a small outfit, etc. So if anybody does want to get in touch, so we can see there's a few people there, then just please do send us an email afterwards, or in any comments to just say, yeah, please get in touch. We will probably be doing more webinars on this. As we go through, we find more problems, we'll start being a bit more detailed, start helping other people on how that works. But what I'm going to do now is I'm going to show you the last two slides. And what we've got here, first one, we've got an event in Saudi Arabia. So at the end of this month, we will be at the Movenpick Hotel with our partner Apps Pro. And we will be going through, I think we've got either a full or half day event. It's free to attend. So again, if you want to come to that, you're more than welcome to. We will be going through best practice around Oracle. We will be talking a bit about our products and solutions. It's not designed to be a sales pitch. It's more designed to be an information sort of exchange. And, hopefully, obviously, then you'll realize that what we're offering is very much above and beyond anyone else's offering, certainly in the Oracle area. Got the QR code there, so if you want to scan that, when we will record this and put it online, so you can go back at a later stage. That will take you back to our events. And then we also we're helping to sponsor the GCC VAT Forum. So we're hoping to make this a little bit more exciting this time round, because rather than it just being a bunch of tax consultants talking about the tax impacts, we're going to be bringing the ERP side as well. So for those of you that actually want to know how it's going to work, what the issues are, we'll be talking about that. Again, educational only. So we'll be very fair. We've got some guests that are coming with us, some very influential people that are around tax engines and tax automation. So we're really making an effort here to provide the right level of expertise for you. And the topic is basically to say, look, understanding your options for the fastest, most cost-effective, and most impactful solution for VAT in the GCC. So if you don't know whether to go for a third-party tax engine, your in-house solution, whether you want a compliance tool, we will happily tell you what the best option is. You give us the information, and we'll be able to answer that for you. Again, the QR code here will allow you to go directly to our website, where we have all of our all of our events that were up and coming. We've been invited to another one in Oman, so we should be speaking at that one. When that's been confirmed, we'll announce that as well. And we're looking to do some other presentations with our other partners in the region. Again, probably something similar where we get a hotel and do a day session, and you can come in and ask us all sorts of questions. So if you are interested in that, again, please do get in touch. You can also see there's a nice code that you can see that will give you a 10% discount if you want to go to that event. From what I understand, it's going to be really good, and the fact that we're going to be there, you're going to get huge amount of advice. It'd be worth it just for our advice. I may be bragging a little bit or boasting, but we really are good at what we do, and we will bring all of that information to you. Any question asked will be answered. Okay, so I've got quite a few questions. I'm going to start going through those now. So we've got one here that says, I heard that small companies are exempted from VAT for now. What is a small company? Generally, I think it's around about just under $100,000 generally. But I think there's a voluntary, you can voluntarily register for under that amount. So if you have a business and you sell to other businesses that recover VAT, then the fact that you can actually charge VAT doesn't really have an impact, because most of those businesses will be able to recover the tax, and therefore you adding an extra 5% doesn't really change the price. But if you're a business to customer, you know, a window cleaner, you're a shop, and you register VAT, you're now increasing your prices. So there were two reasons why you may or may not want to actually register. But that you have to meet a minimum threshold. You can't just register and have no sales or no purchases. I think it's around about 50,000 US. I think our website may have it. If not, we can send it to you. But that information is on the website for the Ministry of Finance. There is another option. What they've done is said for entrepreneur companies that may not have any sales, you can set up to register and recover the VAT. So if you're as long as you're spending over a certain amount, you can actually recover that VAT. So encourage those companies to move forward. Okay, so the next one. Any insight into remote sellers selling electronically supplied services to the GCC? Then where we look at the place of supply rules is unclear. So that was referring to whether Article 20 applies to both B2B and B2C. That's something we don't know yet. When we work with our clients, we tend to work and say, look, we prefer to get your advice from a consultant. They will be the expertise around the law. We just make sure that happens in the system. We tend to push back if we see that something may have been misinterpreted. Now, the general sort of consensus is that sort of globally is that the rise of digital selling or distance selling puts an unfair advantage to those companies that are local. So whether or not this comes into legislation now, you can almost guarantee it will come into legislation at some point, due to the nature that there's a lot of digital content, certainly in the region. And if you're set up in one country that could be supplying the digital content to all the other GCC countries, that could become a problem. So that's something that it's a good question, something to keep track on. Unfortunately, I don't know what the actual answer is. We've got here, so place of supply of services also need to be captured into the current ERP systems. So this is a good question. From an Oracle background, absolutely, we need to identify the places of supply, and we can decide how we use rules to determine that. There are laws already in place, or the draft laws that say, how to treat a place of goods or the place of services. And of course, the place of supply, even if you're selling domestically, will impact your revenue reporting for the split with Emirates. So that is important you get the right place of supply. But a lot of companies will only operate in one country. A lot of companies will operate in one emirate. And they will have, if they have a restaurant or a hotel, then it's very clear where the place of supply is. So depending on the third-party system, how it captures the information, that information may already be there. Okay. Is there a good summary of the compliance requirements compared to the EU system? I'm not necessarily sure anybody's done anything to compare. I know Deloitte have done a huge amount of work advising the Ministry of Finance. They may have something, but there is a great Q&A session or Q&A section on the UAE Ministry of Finance, for example. We'll be publishing any of the draft or final legislation we'll be putting on our website as well. So I think what you'll find is that some of the bigger players around the tax will start to do webinars to pull out those areas which are different, or a twist on the European side. So if we find that information anywhere, we'll broadcast it to let other people know. But at the moment, I don't think there's anything that actually says this is Europe and this is not Europe. Bearing in mind that whilst Europe is part of the European Union and the Gulf states are part of the GCC, not quite sure how that's currently set up. What we may see is that we start off and it's just very much a case of you sell to one of those other countries. It's like selling to anyone else, but then eventually they start bringing in the reporting to be able to actually have something more like Europe. But we also have a look at Malaysia, Singapore, Australia. Again, very much more of a simple tax sort of system. Malaysia obviously had a lot more reporting codes, so we may see certain things taken from the different countries. Like they may take some reporting stuff from Malaysia. They may take some tax determination around how something is determined from Australia. So it may not just all be focused on Europe. Okay, so what are the pros and cons of both alignwise and consolidated tax calculation? Okay, so the first thing is, if you can, you bring it in line by line. Okay, the reason for that is you're going to have all the maximum amount of information, all the data, and that if there's any issues, it's very easy to single out that particular transaction. You may just get it corrected in your ERP. So if you've got a scanning solution, it's captured an invoice, someone has brought it in as standard tax, it comes into your ERP system, and then during the reporting process, they find out that it is standard tax. But instead of it being 100% recoverable, it should actually be 0% recoverable. Maybe it's linked to entertainment. In that situation, you don't have to go back to the original system to change it. You could change it in your ERP system. Now, if everything had been consolidated, you wouldn't have been able to do that. The other problem with consolidation, of course, is that the data has been hidden. So you may bring transactions in, and someone may say this is the tax treatment, but you may not necessarily know what the split is, particularly if things are zero rated or exempt, which is not so important on the AP side, but on the AR side is critical. If you sell exempt products, that affects how much tax you can recover. If you sell zero-rated products, you can recover the tax 100%. So that is something where getting it right, the right split, could actually have a compliance issue if you don't do it right. Now, if you're bringing in 1 million transactions, then you can't necessarily bring them all in line by line. And that's obviously the payoff, right? We obviously understand that our clients are going to need and insist that they have to bring consolidated transactions in. So what we would say, if you are doing that, at least split it by the tax type. So if it's exempt or zero rated or standard, have 3 lines. You can still consolidate, but it comes into, whether it's AP or AR, you can then flag that as being the correct tax code. It will appear in your tax report. So you have the total purchases or total sales, you have the total tax treatment, and at least then you can be compliant. So that would be our advice around that. Okay, free zones. So free zones may not be VAT-free zones. And in reality, why would you have a VAT-free zone? Okay, the reason why I say that is the free zones were primarily set up to allow companies, certainly international companies, to set up without having to have their business owned by an Emirati. And there's other obviously implications in the way you set things up, and there's other sort of benefits. But why would you necessarily want to have a VAT-free zone? Because the whole point is to collecting that revenue, and there's a huge number of VAT-free zones. So my opinion is that you probably won't have VAT-free zones, but we just don't know yet. So that's one to look out for. Now, any system, the way you can capture that is that if you have a ship to location that's in a VAT-free zone, or you just flag it as such. Even if you just have to classify your customers as being in a zone, you can then bring that into the tax logic and classify it. So it's quite good in that way. Okay, will there be a need for non-resident voluntary VAT registrations in order to recover input tax? I'm not 100% sure on that. I think there will be something similar, and I think there are, what the information I read, I think there was some certain things where there was some talk about that on the Ministry of Finance site. I would have a look at that. One of the things that I'm not 100% clear on yet, and I'm waiting for the final legislation, is how you handle the imports of goods through one country in the GCC and then it comes through. Because if we're treating it as just a country by country purchase, you just reverse charge it or you'd pay the importation. But I think there is it's being treated slightly differently, which would indicate you may have an invoice that has tax from Oman, even though you're in the UAE, and then you would need some way of being able to recover that tax, much in the same way as you put that either like the 8th and the 13th directive. So again, look out for that. I'm sure that's the type of thing when we have the sort of tax forums and we have those experts from the big four that specialize in the tax law, then we can actually then get it sort of finalized. Okay, so we've got another couple of questions here. It says, is it mentioned that VAT will be covered whose total turnover is between 1.87 million and 3.75 million? And what about for those whose turnover is more? I don't actually think it's 3.7 million. I think that was 375,000. And then it was 187,000 was the VAT threshold. So the turnover is a lot less than 1.87 million. So I think you've got the figures are slightly wrong there. So as I mentioned earlier, if you turn over, I think it's 375,000 dirham, which is compulsory. You have to register for VAT. If it's under that, you can voluntarily register, but you have to have more than 187,000 dirham. That's what I think it is. Don't quote me on that. That may be it. So again, that's one. Wait for the final legislation. I'm more the expert on the tax automation side, so that's just how I've interpreted it. Don't go away and tell your CFO that what I said is how it's going to be. So just I would check that with whoever is your tax consultant. Okay. Is VAT applicable on employee benefits like used car tax, accommodation provided by company, need to be tax support, or payroll? Right, that's a great question. So generally, there is no EB tax on payroll. Certainly not that I know of. I've never been brought in to do that. But quite often there are schemes or benefits which are taxable or VATable in payroll. Maybe there's a perk. I think with the company cars, they may actually be 0 rated for tax. So even though you can put the tax and say this is the total tax we paid, for company cars, I understand if they're being purchased as a for one of the senior execs, for example, you cannot recover the tax on that. So that's a good question around company cars. First of all, no tax in Oracle payroll. You'd have to capture it somehow. But the other issue around Oracle payroll is it normally interfaces directly into your GL. And so therefore, if you're interfacing into your GL and there are VAT implications, you need to be able to split that out somehow. And Oracle interfaces into GL do not handle VAT at all. So that, again, maybe if you've got a lot of those, that may either be a sort of a separate report or you have to extract it, or maybe a compliance tool for one of the big providers. Okay, so I've only had 4 people drop off since I've been doing these questions, so hopefully people are finding them useful. How many tax accounts is going to be defined for GCC VAT? Another great question. Okay, if you're looking at this for the first time, that would be a question. And most people, if they're old school and they've been around their systems for a long time, most of their reporting comes from the GL. Okay. Now, speaking again on behalf of Oracle, you should be calculating your tax against your AP and your AR. If it's a transactional information, put it through the transactions and you get your tax. And then all of that tax information is then captured in the tax tables. And you can then report it. You can report it by GL, by tax date, transaction date. You can do all sorts with that information, and it's the correct way of capturing that tax. However, if you have a system where you don't have that ability, then you would want to potentially look at capturing the tax separately and put that directly in a GL. So generally with Oracle, we would say 1 GL code, AP and AR. That's the minimum, and all the tax reporting should be able to be done outside of that. If you're importing directly into the GL, we would say let's try and get another tax control account, which you post into for that split. And if you can only report out of the GL, then you have a 5% tax, of course, have a separate account for that. But then even if you had separate accounts for exempt, 0 rated, and out of scope, How are you gonna? There won't be any values in there anyway because it's all zero, right? So it doesn't necessarily capture the information you need in order to do the right reporting. So so with that, the GL codes don't go overboard. We have seen some clients that will have a separate GL code for every country, etc., because their reporting is done out the GL. If you're using Oracle or a good tax tool, tax compliance product, then you can capture it using one GL code. Other information will tell you what tax regime was used and where it is then reported. And that's part of the importance of standardization, is that you actually don't try and have your users having loads of values to choose from. You don't have interfaces that are all built independently of each other. Try and standardize naming conventions, try and standardize the interface processes, try and standardize as much as you can. It'll be an easier project rollout. It'll be easy to understand. It's easier to train and far easier to maintain. So yeah, when it comes to GL codes as well, in our opinion, if you can reconcile your tax, that's in your tax reports, to the GL, that's the job done. You then use your tax reports. Like we've actually built an enhanced VAT report that we built for the European market and GST market. Works brilliantly. The same report's going to work for the Gulf states. That spits everything out you need. So as long as it reconciles, the numbers match up, then all the other detail will be in your tax reports. And GL reports don't hold whether it's goods and services or whether it was which emirate it is. So again, you want to be capturing that detail elsewhere. How the VAT rates are applied for different goods and services, is it based on item master or PO lines? Okay, another great question. So this gives us the importance of capturing that information. All right, so if you're in a purchasing system, ideally you want to get the split between goods and services there. You can obviously flag transactions as being goods or services. If you have a custom built service, then ideally you want to be able to get a way of flagging it. That would be important. If you're selling products and they're goods and services, create an item classification code that says this is a service or good. Generally if you have items, you're selling goods. So build a solution where the exception is services. So when those values come through to AP and you have a tax automation, the tax will be automated and split at that point. So if a user chooses the wrong goods or services or they don't bother, then the AP person may have to do that. And if you receive an invoice from overseas that doesn't have any tax on it, and they don't bother, they don't look at it, or they choose the wrong goods and services, that could impact what you did. We did the cleanup of a tax solution for a global bank based out the UK, and they had the problem where, or the biggest problem was, they had lots of fines before we put our solution in, and they just had minimal visibility. And in that situation, one of the main problems was any purchases from overseas were coming in and they weren't putting the correct reverse charge on. And the reason for that was their recovery rate was only 7%. So if they weren't reporting that tax and paying it, then they would be in non-compliant and in a lot of trouble, basically. And that's where they got their fines. Now, we actually went one step further. Usually we 0% imports of goods because we're expecting a tax-only invoice. With this particular company, we took the path of least risk, and we actually reverse charged the goods as well. And we just offset that against the posting against the customs invoices that would come in. So it's all about looking how you capture that information, that split between goods and services, giving the person who knows what they're doing to do it. To capture that point. Now, anything that's inventory based and you're buying it would normally be a good anyway. So you can use the fact that it's inventory, and you could potentially have certain GL codes and certain inventory classifications to say whether something's goods and services. But if you're going to go down a certain route, you really need to be consistent and stick to it. You don't want to say, well, we've got 20 GL codes that we can use, and they're always services. We use those in the rules. But then we've got another 50 transactions that we have to deal with. All right, we'll use this for that. Look, whatever you go with, try and standardize that approach and stick with it. Okay, so I think that is 13 questions I've just answered. There's no more. Oh, here we've got one more. Sorry, just come in. How does Innovate Tax help implementing the EV tax? Do you provide the patches? Do you have support team in Oman? Can you please share Oman? Okay, yeah, I'll give you the information. So we try not to do sales pitches on these types of calls, but just to let you guys know, the way we work is that we have a whole bunch of tools that allow for a rapid install. So to give you an idea, we were able to roll out 37 countries, and from start to ready for testing was just 3 days. So the way we work is that we bring a solution with us and then tell us why that doesn't meet all your requirements. We call it the 80-20 split. So what we will do is that we'll load our solution in. At the same time, we will be conducting the workshops with you, understand all your requirements, and then from there we will then update our tax solution. So we provide that foundation. With one of our clients, 99.96% of the logic was straight out of the box. So we try and capture as much as possible. But another client, only about 60% was out of the box because they were an events-based company, and therefore we had to work out a way of identifying the place of supply for that event and how we deal with it. We provide a fixed price, so it doesn't matter whether you're the really complex or the nice and easy. We get your solution in without all the extra costs. And so therefore, when it comes to patches, we have all the list of the patches. We can tell you what they are. We then have the loader that gets everything loaded in. The same tool then copies across all the environments. So it's very fast and 100% automatic. We then, because we provide the same solution to all of our clients, because it's that really enhanced solution, we provide all the tax reports, we've got our tax analytics, we've got test scripts already provided, we've got test interfaces. We can load 2,000 transactions in and do your testing in 2 hours rather than over 4 weeks. We've got video guides, user guides. So everything is built around our solution, which means that you're not just getting a tax configuration, you're getting all of the support material, all the configuration, everything that goes around it. So I'll stop the sales pitch there. But if anybody wants to know more, please do get in touch. That's obviously why we do this and why we will continue to do this. So thank you everyone for attending, and look out for the next events that we do. Cheers.